Okay, what I'm going to do in this video is I'm going to talk about gaps. I'll just bring this screen grab up. Something I share on Twitter quite often. Understanding your gaps. So, 3 kinds of gaps, what you should know. Breakaway gaps, when price gaps above a base or consolidation on huge volume and holds the gap before grinding higher. Triggered by news, triggered by a product, whatever it's triggered by, all great trends will start with a breakout, and a breakaway gap out of a range is, the first step many stocks take on their big trending runs. So, breakaway gaps. Gap number 2, continuation or runaway gaps. So, as this trend starts to sort of build strength, you'll get a little bit of bad news on, someone's downgraded on one day and the stock will just drift a bit, and then bang, it will gap back up and off it will go on its journey again, and it will just feed on itself. There's no sellers to sort of at a loss to affect the sort of stock on the way up. It's just accumulation. Exhaustion gaps. This is when, I'll just read what I've put here. These are found after an extended run in price and occur in the direction of the trend and can form a major reversal. Great results already priced in. Amateurs buying the news, professionals taking profit. So we've seen that many times, over and over and over again. The stock's trading towards some great report. It's gives some guidance out. It's saying we're ahead. The stock trades towards these great results they're expected to post. They post the great results. When something's at its best, it can be, stocks top when they're at their best. They bottom when they're at their worst. It's just the way this game works. So, you will see that, people will chase the report. It will gap up on the open interest, and then it will just get hit with supply. Bigger players are taking profit to move into the next stock. So, that's a little bit of the psychology in the game. So, breakaway gap. Tesla, back in 2019, basing out. It was going sideways for maybe a year, and clean gap out of the range. This is what I call, it's a breakaway gap. It's not traded this price. It's broken out of a range. You will get gaps price gaps up, but it's recently traded the range. There's a lot of gaps. Gaps happen every day in many. Most stocks will have a price sort of close open gap, but the more meaningful ones are going to be the ones what take them out of a range. And this is out of the range on huge volume. So, breakaway gaps. I will just go back to the previous move Tesla made. Stocks tend to make a lot of sideways up and down and then a big trending move. And if we go back to 2013 in Tesla, got this little basing action down here, what went back a year or so. Tesla gaps out of the range on huge volume compared to prior volume. Let's just zoom in on that. So following a breakaway gap, stocks can come and test the gap. They can pull back in, do the base retest. They can pull back in deeper depending on the market environment and the news what's gapped it out of the range before they can start the trend. So just because you see a gap, it doesn't mean it's guaranteed to go higher. But a few simple rules. You've got your big gap. If it trades above here, well, there's a fair chance it's going higher. If it trades below here, it doesn't mean that it's going that far lower, because it doesn't mean it's going to trend lower. So, you know, trend can be basically filtered with a moving average, and I've got the 10-month here. So, you know, if the 10-month is rising, I'm only going to trade a gap in the direction of the trend. You'll see here as well, you know, it gaps out the range above the 10-month, and instantly the 10-month starts to tick up on that gap. You can see if you zoom right in, it's actually ticking up on this day here, and it starts to move higher. So a trend filter is wise, you know, when you're looking at gaps. Another thing to note here, some gaps will have some supply, some won't. You know, the ones that don't have supply are always going to be, they've got no forced sellers at a higher level. They're going to be the better, stocks with recent supply can give you headaches. Now, this has got some recent supply. It just ground this supply off and then went off on its journey. So another thing, when you're looking at gaps, maybe the ones that haven't got any supply, are, you know, over a run of 100 trades, are probably going to give you better results. If this had recent supply all the way here, you know, it wouldn't be as good idea as supply what has less memory further in the past. So when talking about gaps, also have a look at where the supply starts. Very in depth, I know. I tend to go a bit overkill on these things. So that's breakaway gaps. Look at the volume, look at the supply. You know, is anyone trapped? Continuation or runaway gaps. Once this stock is in play by the momentum traders, nobody is at a loss in recent history. You get a little gap down here and it just drifts and goes back through it. You get brokers downgrading this all the way up, and it will gap down here and then it will drift back up. It will gap up, and you will see continuation gaps. You know, you see one here, you see one here. Let's just put a few of these in. You know, it gaps up. It's not a clean air gap, but we get one here. It drifts back in, still recovers. We get another one here. You know, we get one here. We get one here. This one's a clean air gap. You know, it's got absolutely, it's kind of, you know, it's like a breakaway gap, but it hasn't got the recent range to break out of. Clean air gap. It's not traded there before. And then you get another one and another one. But let's just go to the last. So continuation gaps, these occur in strong trending price advances. Now, you know, let's just agree, this is an extremely strong trending price advance. It's gone up a couple of 100% or more. And from the gap, it's gone up 200% to this area. It's an extremely strong move. It's getting, look at the distance from the 200 day. Look how far away it is. Strong trending price move. And then we get the last gap on the screen grab. Exhaustion gaps. So these are found after an extended running price and occur in the direction of the trend and can form a major reversal. So, great results already priced in. Amateurs buying the news. Open interest. News report. Professionals taking profit into it. So let's just zoom in on this price action here. You know, these continuation gaps, and then we get this. Make sure you've got the log scale on so you compare the price action moves with the prior sticks, all in percent. You know, look at these blow off moves. It's just done in 2 days fact, in 2 days, it's done that much. You know, that's a huge move. It's huge move. Gaps up again, opens below. So, you know, there you go. You've got your blow off top. And something else you will see a lot of. You'll see it get sold down hard, buyers come back in, and then you'll see it again. You know, little gap out of this range, gaps up again, and then drifts before giving back, you know, 60-70%, pretty normal. So, you know, there it is. There's your exhaustion gap after an extended running price. And I'll just take the log scale off so you can actually see that in points on the linear. But it's more meaningful on the log scale. So we go back to Tesla in 2013. Breakaway gap. Continuation gap. Continuation gap, pulls back in, you know, continuation gap, pulls back in after that one. And it goes there. It gives up 35-40% from highs maybe. But it's quite orderly. So you don't know how these things are going to end. This one doesn't have a, you know, a blow off sort of, let's go back to it, exhaustion gap, which is good. But you do see one on the next run up here. And up it goes. And it drifts back through it on heavy volume. 28-30% pullback. And then it starts just going sideways for many, many years. So you will see this over and over again in stocks what start on their journeys. Some stocks will only ever make one move and then roll over and die. Some stocks, you know, Tesla, this is its second in its history of, you know, what I've got on this chart. It's the second time it's traded a breakaway gap and gone on a trending run. I don't see another one in the mix anywhere, no. So, you know, there was a little bit of action over here, but no, you know, when you zoom the chart out, put it on a log scale, it's strikingly obvious. And I'll just put Facebook on as well, because Facebook did exactly the same thing when it started its run. But you'll notice this one was a huge gap out of the base, but you know, it was still trading the top end here. But the same went with Facebook. You could put a bracket on that gap, and if it's above, you can be long. If it takes the low out, then you wouldn't be short, but you'd be looking to go long on a pullback entry. So there you go. Know your gaps. Facebook.